Those in debt are ultimately under control of their creditors, and we have the largest creditor nation in the world, and that is China. But today, we're going to discuss how China's economy is sinking fast. You came here for the truth, so let me unveil that for you. I want to discuss exactly why China is important. I want to get into a few of the undisputable facts and show you a bunch of charts which prove my points. Let's begin with this here. Chinese GDP growth widely acknowledged to be well below the new 7% GDP target already. So we're looking at this GDP number that they put out, and they say we're going to have this target of 7%, and they can't even meet it. It actually dips below that, and we'll get into more information in a second, but let's look at the GDP statistics and what exactly they mean. The GDP is essentially the worth of a particular nation. It's their exports, it's all their goods that they're selling, and so on, and that's the total, that's the GDP. So if it's sinking, that ultimately is a good measure of their value at that given moment. So when you have a nation beginning to slow down in their GDP numbers, you can expect other things will slow down as well. So when you have this official GDP number declining, you have a big problem. So let's move into the other estimates, and this is the guessing game. Statistical irregularities leave economists pondering China's actual growth rate. So they decide to make their own. And you look at the official GDP figures on the left here, 7%. And then these other ones, Capital Economics, Citibank, Conference Board, and Lombard Street, all hovering in between essentially 4%, 5%. And these numbers are significantly different than what the government is projecting with their 7% number. They're not going to be able to meet this number unless they really ramp up the QE, unless they take care of it in that regard. But all that's doing, of course, is devaluing the yuan. They want to devalue the yuan, but they don't want to essentially devalue it to the ground. It's a race to the bottom, but at a snail's pace. And right here in this one, we're going to look at China industrial production year to date, year over year. We're looking at going back into the Lehman crisis. I believe I've showed you this before, but we're looking at the new numbers here. Industrial production, obviously, particularly for China, is extremely important. And what happens when it declines, look at it. Right after the financial crisis, you have this big dip, and then it shot up very quickly, but ever since then has been declining significantly. You're heading back into the Lehman crisis era. In many ways, it's actually surpassed that. But here they are, industrial production in such an important country like China for industrial production is down significantly. In my book, I talked about China, in fact, mentioned them quite often. I'm talking about the debt. According to the official government statistics, the trade deficit with China in 2010 was $270 billion. This is the largest deficit of any two countries. It's not surprising either. The U.S. exported $90 billion, whereas they imported $365 billion. A huge chunk difference right there. And this doesn't surprise me in the least, and I'm sure it doesn't surprise you either. So what they're saying is that they have to print money. They have to buy up the U.S. debt so that they're holding it in U.S. denominated assets and not in their own. This is a way that they can keep the value of their own currency down. This is a method that has been working for quite some time. They're going to continue to do it, and it is in fact a currency war that is taking place. China doesn't have the strength that they once did, in fact, which is a big issue for them. And of course, politically in the whole world, yes, they do. What I meant is that their growth rate isn't what it was. That's the engine that the world is looking for when the US isn't that engine. They don't have what they used to. Of course, there will be times in the future where they do grow at a rapidly accelerating accelerating rates, but the whole world is struggling right now. You can't have one country doing well if all of the other countries are doing bad. Look at what happened particularly in 2011, where we had Europe beginning to fall and all of the nations in Europe started to look weaker by extension. Very important to look at this deeper. China rail freight year over year, also another important one. You're looking at a massive decline right there. This is just one other example. When you want to talk about rail, you need to look at the statistics like this. When you want to talk about shipping, something like the Baltic Dry Index is extremely crucial to look at. We're down significantly, decades low, and this is not really going to be fixed anytime soon. This is quite unfortunate. And last but not least, we get 4 charts in one. We're looking at steel. And the first chart in the top left corner, you can see that China is definitely ahead of the rest of the world in this regard, but they're still declining at the same rate. So it goes to show you that everything is interconnected. Global iron ore production is up significantly. That's something to look at. China's steel demand flattens out. This is going to show you that the production, whether it's building new homes or building commercial things, whatever it might be, their production levels are down. And last but not least, as iron ore supply continues to rise, when you have supply and demand fundamentals in place, you're going to have a serious issue. For this in particular, the supply is increasing, yet the demand is staying flat. Perhaps we'll head negative at some point soon. So here we have a problem, a future crisis on our hands. If you found this video informative, please give me a thumbs up. I just wanted to let you know that I'm trying to get back to the emails this weekend. I'm going to try and reply to each and every one of you. And I would also say that you need to be a subscriber on here. We have about 20,000 subscribers at the Money GPS YouTube channel, and I want to see many more coming through. So I do appreciate every time you hit the thumbs up, all your comments, all of your shares that you do. It's very important to get the word out, as well as to promote what I have here. Very kind and generous that you do so. And last but not least, if you found this video informative, I know that you will find my book, The Money GPS, really good as well. So if you want to flip through it, you can actually go to Amazon and they have a look inside feature, and you can flip through the book and take a look for yourself. Take care.